Welcome everyone to our 35th annual Pump, Valve, and Water Systems Symposium. I'm Kevin Dreyer. I'm Co-CIO of the Value Team along with my colleague Chris Morangi and Mario Gabelli. I'm joined by my other colleagues here, Tony Bancroft, Justin Bergner, Sarah Donnelly, and Simon Wong, who are going to lead us through a lot of very exciting and relevant discussions with companies in the industrial sector that are very, very relevant for today's economy. So with that, first to take us with an overview of some of the markets these are some of the companies that are presenting, is Justin Bergner.
Thanks, Kevin. Again, I'm Justin Bergner, Portfolio Manager and Industrials Analyst with the firm, and welcome everyone this morning. I just want to discuss some high-level themes as we get underway this morning. So, key themes for discussion this year. Big change, obviously, in the dynamic over the last year with the change in the administration come November and January. So top of mind is what is new legislation, what is new regulation, or I should say lack of regulation, and tariff policy going to look like, and how will that affect things? You know, will it be inflationary? Will it be disinflationary if we get benefits like productivity enhancing accelerated depreciation? Onshoring and supply chain issues will continue, although now it's not so much how companies adjust post-COVID, but how they react to carrots and sticks as it relates to U.S. industrial policy and industrial policy by other countries. Global infrastructure investment will continue. IJA is still a number of years into the bill to be spent. Digital initiatives in AI clearly driving productivity and driving companies' investment decisions. And the M&A environment, which started to pick up in 2024, looks to continue to strengthen as we move through 2025 under the new administration. PMI activity, which measures kind of global industrial sentiment globally, has been very lackluster the last 2 years. No surprise. We've started to see it pick up over the last couple of months towards that 50-ish neutral level, although still below multi-year averages. We'll see over the next few months if that rebound can sustain itself, but certainly bodes positively. The key inflationary metrics on the input cost side for the industrial economy have actually been quite stable despite some concerns at the macro level about inflationary dynamics. So oil prices have come down and have been stable around that $70 level. Copper, not inexpensive, but relatively range-bound and manageable at the $4 to $5 per pound level. And steel is the one that probably bears watching given the new tariffs. It came down pretty meaningfully over the last couple of years and now may be ticking back up again with 25% tariffs being imposed on steel and aluminum in the U.S. And that will obviously affect the broader industrial economy to some degree. You know, we continue to grow as a globe, both in terms of population, but more importantly as a middle class, which just means more food, more water, more industrial activity and energy, and, you know, is just a continual bid on industrial activity globally. Infrastructure spend continues. The IJA is now a few years in. $550 billion of incremental spend over 5 years across bridge and highway, electrical grid, and water. And then, you know, on the positive side, there's a lot of productivity upside looking out over the next couple of years, which has the potential to lower costs and lower inflationary dynamics. The big one is digital evolution, AI, as companies improve asset safety and uptime, enhance value add to the customer, and, you know, use large language models to improve the interface efficiency of their applications. So a couple of examples below of applications from companies that are here with us today. So with that, I will turn it over to Sarah, who will discuss some themes on the water side.
Good morning, and thank you for joining us this morning. So water is essential, and on the screen, you'll see major issues confronting water systems in the U.S. and even globally today. Water is a scarce commodity. As a reminder, only 3% of water is fresh. Brazil, Russia, and U.S. have the most usable fresh water. In the U.S., in general, water infrastructure is old. It requires upgrading to ensure resilience, And now we're finding that the presence of PFAS, or heavy metals and other toxins in potable water, or even in the soil, are drawing greater concerns. Consequently, we are seeing more stringent regulations established at both the federal and local levels. There's a shortage of skilled labor. So we are seeing greater adoption of technology and digital solutions to compensate for it. And this includes across water systems, but also in commercial and institutional buildings. So despite the upgrades needed, water must remain affordable. In the US, we consume 320 billion gallons per day, of which less than 20% is used by the general population, provided by municipalities, but also for household and commercial use. In the US, as I noted, infrastructure is old, and this illustrates here that the average age of water pipes in the US is approximately 45 years. Municipalities are responsible for more than 1.2 billion miles of just water mains, plus there's another 1 million miles more of water pipes. Therefore, given this need for an upgrade, as water pipes are replaced, it's also stimulating demand for other products and upgrades across valves, hydrants. New technology is needed, such as sensors and monitor systems, to operate a more efficient system. So as more stringent regulations have been announced by the EPA, this is mandating minimum standards for drinking water. Regulations have set reductions across acceptable levels of toxins, such as arsenic and, as I mentioned, PFAS. In total, the EPA estimates that we need $625 billion in water upgrades in the US over the next couple of decades. And the IIJA is set to make a dent in this, as it's allotted over $50 billion to enhance safe drinking, whether it's lead replacement, lead pipe replacement, and the elimination of contaminants, not only across potable water, but also wastewater and pollution management. And I'll turn it over to Kevin before we get started with our first speaker.
Thanks, Sarah and Justin. So just to recap, when we're looking at 2025 in terms of trends, clearly top of mind is legislation, regulation, and tariff clarity, and all of those things, their impact on the economy going forward. We're seeing some improving short cycle demand, reshoring, stimulus, and energy projects. Infrastructure funds and mega projects are still in focus now. We're looking at potentially a more favorable M&A environment. I guess we'll see what the companies say. And finally, smart, connected, and AI offerings, as well as AI being used to enhance productivity, is clearly at the forefront. So just to run through our schedule, we're going to start off with Graco at 8:30, then Watts Water virtually at 9, Enerpac at 9:30, ITT at 10, Gibraltar at 10:30 virtually, Landis & Gyr at 11, Flowserve at 11:30. We're going to have a short break for lunch and then return with Enpro, Mueller Water, Graham, and Ametek in the afternoon. And then we're going to wrap up with Gorman-Rupp, Badger Meter, and Crane. So really a great list of companies. Very happy everyone can be here. We'll start in just a minute with Graco. Would welcome everyone to take their seats so we can get started with that presentation. Thank you.